Good morning, Wall Street winners. It is Wednesday, February the 12th, and we've just had the US Consumer Price Index or CPI print come in, and it was higher than expected at 3% year over year as opposed to 2.9%. So it's stuck above this pre-COVID level. They're trying to get it down to 2%. Um, I think that now there's going to definitely be another look at interest rates potentially being lowered in the US. But they have to be careful with interest rates and the US Fed. And Fed Chairman Jerome Powell was speaking either on the Hill, on Capitol Hill yesterday. I don't know whether it was to the Senate or to Congress, but he was being asked on a scheduled basis as to um, his thoughts on a number of different topics, and certainly inflation was one of them. Debanking was another one that came up quite frequently. And with inflation, I think what we're going to see if the new US administration moves forward with the tariffs that they're proposing, we're definitely going to see inflation in multiple countries because those other countries that receive the tariffs will probably retaliate with tariffs of their own, and that will lead to more global inflation. And there's only so far you can bring down interest rates until they get to zero. And like we had in some parts of Europe a few years ago, following the financial crisis, Switzerland being one example where interest rates were negative, we're probably not going to get to a negative interest rate situation in most countries. So there's only so many percentage points or basis points that they can lower the rates in fighting inflation. There have to be other economic measures that and business measures that are taken. So we'll see how this all plays out. But this whole concept of any country first, I mean, America first being the slogan used most frequently these days, it usually also means America alone. So if you're going to be first, you're going to be alone. And that could mean isolated if you look at that as well. And it could be isolated from an economic standpoint. And that may not necessarily be a good thing. When you bring manufacturing back to your own country, which is definitely a great goal to have, you want to be able to sell those products globally. So, part of the reason that these large companies like Apple have a base in America and manufacture elsewhere is because A, the manufacturing is cheaper elsewhere. The talent, the skilled talent necessary for the manufacturing is available elsewhere, and yeah, that keeps your price low and your profits and your profit margins higher, operating expenses lower and profit margins higher. So that makes you more profitable as a company, and that is what all companies strive for: is cutting costs, increasing their gross profit margin or their profit margin in general, not just gross profit but profit, and that helps them to grow as an organization. So we'll see what happens and what the fallout there is when we turn to the market with all of this, because this is just high level stuff that's going on that has immediate impact on a daily basis to stock prices. But we have to think about the high level stuff in the long term, so that you can kind of get a feeling for where the trend is in terms of prices, future forecasts, and general company success and prosperity. So, looking at the markets in the US with that CPI announcement, everything pulled back. You look at the NASDAQ here and the one day, and you can see it was actually relatively decent, and then it dropped 213 points just around the release of that information. The Dow, similar, it's now down 391, oh, now down 411. It was fairly decent this morning, holding its own, and then it dropped significantly. I think it presents a buying opportunity if you have some cash, if it's found a bottom and starts to come up. So if these indices look like they're coming back from where they dropped and bottomed out at, it should mean that the stocks will do the same, or the greater majority of them that are in that index basket. So if we scroll across, crude is down 82 cents at 72.50. So crude's moving around a tremendous amount, like a percent a day or more, which is incredible for the volatility of that commodity. The VIX is shot up almost a full point, so it's at 1680. And we have a look at the stocks we follow. All of the health and retail are in the red this morning. Everything is down. So I would look for stocks that you think are going to do well in the quarter if they haven't already announced and have good prospects for the coming year. So I thought Lulu was a good buy in the 390s about a month ago, and it popped up to the 410s. It's looking like it's getting back down to the low 390s, but I'm going to wait and see whether we have any more economic news and headlines that may be a concern around affecting US consumer spending. And inflation and tariffs definitely will affect US inflation and consumer spending. And people won't have enough money to buy Lulu. One of the things that drove up the CPI today the most since I think 2015 was the price of eggs. The price of eggs has skyrocketed. A lot of that due to cases of the bird flu in the US and a number of chickens that lay eggs having to be killed. I think 20 million, a huge number. And obviously that affects immediate egg production. But overall, I'm a little skeptical at this point of retail and healthcare. So staying away from those. If those are affected and the economy is heading into a recession, which I believe it is, then our transport stocks are going to be affected because they effectively move product as well as construction materials and anything else, raw materials used in an economy. And when those are being consumed and used less, then there's going to be less profitability, less revenue for those organizations. So I'm avoiding the transport sector. Oil is a sector that has a lot of potential, but it is very volatile. Um, I'm watching this sector closely. I do have some oil holdings. Well, the one oil holding I have, Valero, is currently below what I paid for it last year. So that was a buy and more buys as it drew down. And I'm still underwater on the Valero holding. But I do have a pretty good sense that that will come back at some point in 2025. So I'm just waiting, and it pays a decent dividend. Um, Technology is down across the board. So this presents some interesting opportunities if we think about the long end of the curve or where we are in the economic cycle. I think we're still going to see, even in a recession, large organizations will look at driving efficiency. One of the ways they do that is to lay off people. Another way is through technology investments that help to automate things and drive efficiency that way. So we're going to hear from Applied Materials on Thursday. It looks like Applied Materials today is going to open in the high 170s. I'm going to consider a play in or an acquisition in Applied Materials today. I'm going to wait to see where I feel it has hit a bottom, and I'm going to do that by looking at its price as well as what the overall NASDAQ index is doing. And when the NASDAQ moves up, if Applied Materials does not, I will buy and I will see if it can retrace back up and catch up with the percentage decline in the Nasdaq. And if not, I will hold it until tomorrow after market and see what happens. I'm also looking at Nvidia. I think with the DeepSeek announcement 2 weeks ago, Monday, Nvidia has a lot of potential. On this earnings cycle, with especially with all the big Mag 7 and other companies announcing their capital investments and expenditures in AI. Micron is another one. This is set to be down at the 90, $89 mark. I think coming in now, earnings aren't until March, so you've got about a month, and that's a long time with the current administration and what's going on with the uh, significant changes being made or being attempted. I do think Micron is a solid bet going forward. So I'll take a look at that. I'm going to pass on most of these others right now, although Team Atlassian, which had great earnings, being off 7 or 8 yesterday and another 7 or 8 today. If Atlassian gets down close to the 300 mark, I will definitely take a look at Atlassian. ARM as well had good earnings and a decent future forecast. I think that on a sell-off that we're seeing here, ARM is a very good pickup or acquisition to add to any portfolio. And then scrolling down further, another favorite that went quite high, $17, $20 higher on layoff announcement last week was Workday. And it's now come back. It's falling back from that previous bump, down at 263. If it does open down 761, you're going to be in the mid 250 range, and that's a pretty sweet spot for that stock there. And then the other one, AVGO, Broadcom. Broadcom has not announced yet. Broadcom announces in early March as well. And I believe we're going to get some pretty amazing numbers out of Broadcom based on their last quarter. So, not loving it at 235, but down at 230 or even 229. I think there's a lot of opportunity there. And that stock's been moving a fair bit throughout the day. Most days. So, you do have a fair bit of movement for profitability if you can time an entry point where it looks like it's starting to turn around. And then we get down to Tesla. Tesla is the only, well, one of the few that's up this morning. Now, it was up more a few minutes ago. It's up less now. It had a rough day. I don't believe Tesla's coming back right now. I believe that stock is going to get into the $200 range very shortly, especially when it announces its next sales or product, the number of cars being produced, the production numbers coming out of Tesla, because I don't think they're going to be what analysts and investors want to see. And then moving forward or moving further down, Alibaba. So this is one that I said I would stay away from the other day, and I still will stay away from Alibaba, but it is interesting to see. It's become the AI darling of China, even with the DeepSeek announcement. And this thing has moved from the 90s up to the low 112s, looking like it's going to get to 115, 116 today. So not expected. This is one that I was not thinking would make a move, but it is making a move. And normally the Chinese stocks have really been burned, especially around the tariff talks and the discussions around doing more to keep China at bay with chips and things like that. So we'll see what happens there. Nvidia is off this morning. I do think it'll come back. I think that's a bit of a bargain if you can get in the 220 range. And then Google is a long-term favorite of mine. So if you just want to buy something and hold it and kind of forget about it, but want to try to make 10, 15% a year, right now, I think Google is one of your best bets to do that. Although it does not pay a huge dividend, but it does have a small dividend that pays 0.39%. It doesn't have a huge dividend, has a lot of upside potential, as does TSM. So TSM, another chip stock that's down. I'm liking TSM the closer it gets to 200. I do think it's going to be a $240 stock by May. So I think you've got a lot of opportunity there. And then you get into the financials. There's a lot of deregulation. There's a lot of opportunity right now in the financial sector for um, doing things that you probably shouldn't do as a company and that will hurt Americans in the long term, the consumer in particular, but that may be very good for investors because of short-term gains on manipulation with the decrease in regulators based on some of these layoffs and termination packages or retirement packages we're seeing from the Doge group out there in their first couple of weeks, looking through where they can drive efficiencies. So that's where we are today. And I want to wish you good luck with your trades. If you're liking these videos, please hit the like and subscribe button, and we'll talk to you again either later today or tomorrow.